Hi there, thanks for coming to this 5-minute class. I'm Jennifer Croft and I'll be teaching you how to forecast monthly overhead expenses. If you like this class, we have a bunch of other classes and free resources available at www.5minuteclasses.com. So let's start with a definition of what are monthly overhead expenses. And so these are the expenses in your business that do not fall under the category of cost of goods, which we'll talk about in a second here. And these types of expenses are often referred to as fixed costs because they generally stay the same regardless of how much you sell in a given month. Cost of goods is sometimes, on the other hand, referred to as variable costs because the amount that you spend on cost of goods is going to vary depending on how many products you produce or buy. So let's go into that cost of goods definition. So cost of goods is the amount that it costs to produce or procure a product. And so we use the term produce if you're the manufacturer, you're actually making it. So the cost of goods is the amount it costs you to make a product. We use the term procure, which is really just a fancy way of saying buy or obtain if you're a distributor of a product or a store owner, either retail or online. So let's look at some examples of monthly overhead expenses, and also it might be helpful for you to go to the website and under Worksheets download. We have a worksheet designed just for this called monthly overhead, and it goes into a lot more detail than this, but this gives you some example of some of the general categories that a small business might have for overhead expenses. Now let's look at those same expenses with some numbers attached to them. So in this example for this small business that I'm using, the rent is $1,500 per month, the utilities are $300, employees are $10,000, and we need to be sure to include in that overhead expense the amount that we pay for their payroll taxes. And we also have an expense of phones at $400, insurance at $250 per month, marketing at $750 per month, bookkeeping or accounting fees are $200 a month, and our vehicle expenses are $1,000 a month. So totaling all of this for this small business example, our expenses would be $14,400 for the month. How does that fit into the big picture though? Because small business owners often mix up some of these terms, and so I want to be just really clear, start to finish, uh, what different types of numbers there are in your business and where overhead expenses fits in there. So to give you a big picture example for the same business that we just covered, we're going to assume for that month that sales were $30,000. We brought in $30,000 worth of revenues. And from that $30,000, it cost us $9,000 was cost of goods. That was the amount that we spent producing or procuring our products. We spent $9,000, which just in this example, I'm using a number of 30%. Our cost of goods was 30%. So that left us with a gross profit of $21,000. And you come up with gross profit by just taking the amount of sales minus the cost of goods equals gross profit. Below that, then, we take out our overhead expenses, which in this case were $14,400. And so that leaves us with a net profit. This is before taxes, but it's a net profit of $6,600. So hope all that explanation and formulas helped you. And these are some next steps that you can take that relate to forecasting monthly overhead expenses. These are some worksheets you can use, including the one I had mentioned earlier, the monthly overhead expenses worksheet. And we also have a free newsletter that you can sign up so that you can keep learning more about how to run a small business. In the meanwhile, thanks for coming to this class and best of luck with your business.